Hey guys, Dan here from Dansmillionairecode. It's been a minute before we've done a podcast with a Titan, but now I have one of my friends and mentors, and really in his field, the Titan of Titans in his field. I mean, really, for what he does, the guy who's the biggest guy I know in his field. So we'll get right into it. S Pennington Jr., great friend of mine. So he was a co-founder of a fund, a multifamily real estate fund. He brought it to $28 billion when he was running that. And then now it has scaled to some exorbitant number, which I'll let you get into.
Yeah.
He's also the author of this killer book, which you need to pick up. We'll give you the information on how to get it. Dollars, gold, and Bitcoin. He was kind enough to let me be a little bit here on the book too. And
there's him on the back, yeah.
Yeah.
Dan Young on the back of the book.
So pretty cool. But the difference here is he's not just like a friend in business, though. He is like truly a friend of like personal connection. And that's a big deal. And for the few mentors I have that are like my top ones in my lifetime, I can count them on one hand. He's one of those guys. So when I have a problem, I come see you.
Gives me a call. We go to lunch. Yeah.
Oh man.
Yeah.
So
fun talking.
Thank you for coming.
So fun. So glad to be here.
Yeah.
Yeah.
So you started this major hedge fund. Maybe give us a little bit of the journey of how you got there.
Yeah.
From your humble beginnings to like people don't even like have a clue. Didn't have a clue before of like what you did. I think your son, who's my partner in our hedge fund,
right.
the unicorn.
Right.
He didn't even know about how much you had built, and he tells me those wild stories.
Yeah. So he helped me write the book a little bit, and both my sons did, and they were reading stuff going, I didn't know you did this, Dad, and I got this in the book, so pretty fun. So just really quick, right out of college, or in before college, I looked into the mirror, and this is what drove me all those years. I seriously looked in the mirror. I remember doing this when I was late teenager, almost 20, and I looked in the mirror and I said, John, you're not afraid of being poor, and you're not afraid of being old. You're just afraid of being old and poor at the same time. And that, as I've repeated that to myself year after year after year, that drove me over, the whole 30-something years.
Read that line, though.
Yeah,
so we can embezzle it.
Yeah, here we go. You're right there.
Right this
right there. I'm not afraid of being poor, and I'm not afraid of being old. I'm just afraid of being old and poor at the same time.
You texted me that again.
I did that one time. Yeah.
Wow.
Yeah.
That's a huge one.
Yeah. That's my quote. That's my quote of the last 3 decades. I just repeat it over in my head, over and over and over. I'd wake up every morning and go start a new business or something. And I was always repeating that over in my head. I can't be old and poor at the same time. It's not going to work for me. Yeah.
Look, the big question that I have is this: like, when you were young, were you like? A lot of people will think that like people that have created billions of dollars in value and wealth and companies were born with a silver spoon. Their parents paid for like Harvard or something.
No,
inherited $1 trillion.
Yeah.
Did you inherit like billions of dollars?
No. My parents were loving, great parents, but I didn't inherit billions of dollars. No, I actually worked 40 hours a week. My last 2 years of college, I worked from 8 in the morning till 4:30 in the afternoon, drove home, showered, kissed my wife and my little son, and drove to school from 7 p.m. to 10:15 p.m. at night, 4 days a week. I had night school. That was the last 2 years. And then studied on the weekends, and then worked 40 hours a week again. Every week.
What were you doing for work?
I was putting in sprinkling systems for yards. I was digging, pickaxe, digging.
40 hours a week?
40 hours a week. Or landscaping, doing something. Yeah, 40 hours a week. Because I had a wife and a son. And so, and
money good?
Money was, that's why I did it, because money was good. And taking out student loans and all that good stuff. And I got a degree in economics, which doesn't give you any real marketable skills unless you're going to get a master's or a PhD. I mean, it teaches you how to learn, which it did teach me. It taught me a couple things. It taught me that price is a language. As much as Spanish is a language or Mandarin is a language, price of something is a language. And I've kind of used that over the years in all my businesses that I've done to kind of gauge of my probabilities of success. So yeah. And so anyway, I started off, and then right out of college, me and some partners, we started a used Levi 501 jeans business because Mikhail Gorbachev and Ronald Reagan, they took the wall down in Berlin in 1989. The wall came down, and that allowed Eastern Bloc kids, the kids over there, teenagers, to buy Western goods. Oh. And Levi Strauss, the button fly, was the original jean made by Mr. Levi Strauss in San Francisco.
Those are like really expensive now.
Yeah, they're expensive now, but back then you could buy them for like $12, $14 at a store here. And so we started buying used and new. Two of my partners eventually moved to southern Germany, and they were marketing into Prague and all over Europe. And I was supply over here. And anyway, we did it for 9 years. It was fantastic. It was a fantastic
9 years.
It was just a cash business, US dollar based. And
what was your role there?
We were all three of us are owners, and I was supply. I was to find the product, get it to warehouse, have it sewn, repaired, re-dyed, repackaged, and sent to whoever they had orders for. And that's what their job was to sell. And then I actually flew to Barcelona, and I set up a second warehouse over there, hired a guy over there. And then I was in charge of Asia's sales to Japan and Asia.
So this is a pretty big business.
It was a big business. And, but my two partners that moved their families to southern Germany, Europe was the big deal. Eastern Europe, it was just huge. And so when you could buy used jeans over here for $10, and then you can retail them for $80 to $100, right?
That's great margin.
And this is 1990, 1991, 95, 90 to 97. And
so now it started.
Yeah. And then it died really bad in 98. And then in 99, I was searching for what to do. And I tried some other businesses, and they didn't work so well. And I saw this report on the newscast of this newscaster. They were vilifying hedge fund managers.
Wow.
Like they make too much money and they pay really low in taxes and they're blah, 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 blah. And people were, and I was like, I want to be one of those guys. I don't want to vilify them. How can I make a lot of money and also pay really, really low in taxes?
Yep.
And so I said, I'm going to start my own fund. I'm going to be a fund man. I didn't tell anybody because you looked at me back then and said, you're a used jeans.
How old are you now?
When I said I was 35.
Okay.
About 35 when 1999. Still young, 35. And and I said, I'm going to be a hedge fund manager. And it took me 5 years. I didn't launch my first fund until 2004. And during those 5 years, I got my Series 7 license, stockbroker's license. I sold mortgages because I understood how mortgages work, but didn't really understand until you start selling them and you understand the back office. And I started my Series 65 a couple of times, during that time, and read PPMs and private placement memorandums,
right.
Read limited partnership agreements over and over and over. And I taught myself how to run a fund.
So for those of you out there that know what a PPM is, what's the simple man's way to understand what a PPM is?
A PPM is a private placement memorandum. It's the disclosure document of like if you're an investor and you're coming into
like a terms of service,
private equity fund. Yeah, it's kind of disclosure. I mean, you have to disclose all the ways you can lose money.
Okay.
You got currency risks. You got the founders could die in a bus accident. You have to disclose every possible thing.
You helped us with our PPM.
Yeah, on your PPM, yeah. And the limited partnership agreement is how the limited partners come together. The investors come into a limited partnership, and you're limited partners. And that's the limited partnership agreement is the agreement all the limited partners come together, and they have an agreement of how they will operate the company.
So that's a very important piece of starting a hedge fund.
Yeah. Any fund, any kind of fund, you have to have a PPM. And
what happens with somebody if they don't have a good PPM and they launch a fund and they grow? They have a terrible one. Wrote it at home or with ChatGPT or something.
Yes, I took a guy to lunch a few months back, and he paid a good law firm to put it together. But this law firm is good in other areas as opposed to securities. They're good in like real estate and other types of things. But he hired them, and they had one guy in their firm that did some securities, and he wrote them up. And this guy was eventually sanctioned by the SEC because his PPM was written poorly. They went out and raised money and started, investing, and the PPM was written so poorly that he was sanctioned by the SEC and has been banned from the industry for, I think, at least 10 years.
Your son told me about guy who kind of homebrewed his own PPM.
Yeah.
And he had some sort of government altercation that he did something wrong or something. And he actually was charged criminally.
Oh, okay. I didn't hear about this guy.
Something like that. So it's really important to...
Yeah, because listen, you are, when you become a fund manager, you are a fiduciary. Meaning you can't just do things that's in best interest of you. You have to do things that's in best interest of your limited partners, even if it's in the detriment of you. Mm-hmm. So if you have a decision to make and your limited partners would do better in this situation, and it would lessen your fiduciary. You have to do, it's like taking care of a little child. You have to do what's best for them, not what's best for you. Sometimes sacrificing yourself.
Yes.
And that's what you and my son running this, fund that you guys are running, same type of thing.
Yes.
You guys cannot put yourself in front of or above your limited partner. So it's a serious thing when you go out and you raise money from investors. It's a serious deal. And that's why the PPM and the LPA and the subscription documents are very serious documents. But once you get them right, it's fantastic because you go out and this is what the investor reviews.
Did you have a mentor to like guide you? Because I know with our fund with Bridger and me, we're always like, hey, John, we're thinking about doing this.
Yeah.
Advice.
Right.
And since
yes,
we hope to raise $48 billion one
there
day.
There you go. Yeah. No, those 5 years, I had no mentor. That's why it took me 5 years to launch a fund. I taught it all to myself. And then I had my first partner. We decided we were doing syndication deals in real estate, and we finally decided, no, we're going to go fund, because I had thought about fund for 5 years. And finally he just said, let's just do it. I said, okay, let's do it. And we just started our first fund in 2004. And we were lending on real estate, doing short-term loans, 1 month to 6 month loans on real estate. And then we started our second fund in 2007. And then obviously 2008 hit, which was the financial crisis. And then we switched. We stopped lending on real estate. We started buying real estate in 2009.
Do you have to start a whole new fund?
Whole new fund.
Thesis
Different investors. We don't lend, we buy. So you put your money into that fund, we're going to buy large properties. And by this time, we had added a bunch of partners, right? The two of us, the first couple of years were alone, and then we had 4, then we had 6, then we had 13 partners. And look, my partners are brilliant. I mean,
I've met a few of them. Absolutely
brilliant. And listen, me and my first partner, we always said in the first couple of years, we wanted to make a big, huge company. But we always said to each other, you and I are not smart enough to do a real big company. We've got to get other talent in here that's better than us in other fields. And so we did. We were able to attract other talent, make them partners, and the thing just grew crazy. As going to 28 billion in just 16 years. It's amazing.
The biggest question that people ask me, and I always ask you when we started, well, what was your capital raise velocity by year? Maybe a little summary of that. And how did you raise money? How do you raise money for a fund? Like, how do you get
I'll give you 2009. Okay, 2009, you're watching the TV and you're watching some big fund like Bain Capital, I can't remember the names, but there's a fund on the news that says they just bought a $200 million portfolio from Bank of America for $52 million. How did you buy a $200 million portfolio for $50 million? Well, the banks need to sell things because they needed money. They needed cash to stay open. Okay. And a fund can pool people's money together and go out and take down a $52 million acquisition. A single person really can't do that. A group of 10 guys can't do that, right? But a fund of hundreds of people that put their money into a fund, and you have some experts that know how that certain asset class works, which I had partners that did. That was easy. So we would just say to people, hey, did you see the newscast last week on the thing? Yeah, I saw that. We're doing those things. If you would like to get in with us and do those things, buy, huge assets from banks at really, really low prices, we're doing that right now. And that's what our fund's doing in real estate. And that's kind of how we started. That's how we started raising money.
But the pitch to get people, do you just call people in your Rolodex, or like, do you throw like fundraising events or what?
Everything. People always ask me, is there one place? And I always say, no, there's not one place. When we first started out, we were which everyone does. You knock on high net worths, meaning people who have a high net worth. You knock on their doors and you talk to them, right? Or you find them. And then family offices are the next level up, and institutions are the the highest level. Institutions are huge. And so when I first started my first fund in 2004, I told my partner, one day we're going to start getting institutional money. We didn't get our first institution until 2010.
Your son just told me this.
Yeah, 6 years. 6 years of running our third fund. And our last closing of our third fund, we got our first institution. So it took us, it takes a while to be institutional grade.
Okay.
The institutions, they write big checks, but it takes a long time to check all their boxes. You have to do a lot of things, check all their boxes. So it's much easier when you're starting to raise money from, high net worth. And what we found is, I had, partners that specialized. I had some partners that specialized in raising money for high net worths, and some partners specialized in only raising money from institutions, and some partners specialized in raising money for family offices. You're talking a different level.
How did you raise your first $1 million in investor capital?
It was just high net worth.
And how did you find these humans?
Again, it's kind of easy.
Really?
And I know people look at it's really easy, but it is. Once you start a fund and you go to a dinner party, right? And you start, usually at a dinner party, what happens, you're at a Christmas party or something, and the person asks, you ask, what do you do? And they tell you 3 minutes, they tell you what you do. And they ask, what do you do? And all my
Write this down.
Yeah, there you go. I have 14 businesses in my lifetime. 3 I've made a lot of money on, and obviously the one, now I'm doing a lot of money on. And 3 I've lost money on, and the others in the middle, they all made pretty good money. But anyway, it's a 3-minute deal. What do you do 3 minutes? What do I do 3 minutes? But when I said to people, I'm a hedge fund manager. I started my own hedge fund. They won't let you stop talking for 20, 25 minutes.
Write that down.
And so once you start a fund, because people don't know what a fund is, and you'll get talking, and you'll go, oh yeah, we also have, Cayman Island feeder funds. And they go, what's that? Tell me about that. And then we also have, American waterfall versus a European waterfall. What's that? And they won't let you stop talking. And so by the end of the 30 minutes or 20 minutes, you go, well, listen, I've been talking about myself too much. Let's talk about you. And they go, no, let's keep talking. Because people are enthralled with the hedge fund world because they hear about it on the news, and but it's a mysterious.
So that first year, can you talk about like how much you're able to raise by doing that conversation, approximately?
Yeah, I really don't remember the first year. I remember the first fund. We were rolling $20 to $40 million. That was 2004. 2007, we got a little bit further, and we had to close that 2007 fund because we pivoted into the third fund, which was buying real estate. Oh. Now think about it. This is 2009. We raised $127 million equity. And that meant we could go out and buy about $350 million worth of property because you go get mortgages. And usually when you get a mortgage, if you're going to buy a $10 million property, you put $6 million mortgage on it, and you put, $4 million cash-ish, right? And so if you raise $127 million, you can go out and buy about $300 million worth of property. And so in 2008, 9, and 10, no one could raise money anywhere. And not even New York. People in New York that raised money their whole life could raise money because but we were raising money because we just knocked on doors and told people we were doing this huge buy downs from these banks. And we would call banks, find a great deal, and just have to fund it, have to raise more money. And it just went from fund 1 to fund 2, fund 3, fund 4. The funds just kept going.
How long did it take to hit $1 billion?
I'm trying to remember. I think
approximately.
Yeah, I think it was 2000. I want to say it was 2012 or 13.
How many years was that from inception of
my first
real estate?
My first one was 2004.
But from when you did real estate, bought it.
Well, so we started buying. So we started buying real estate in 2009. And I think I don't remember actually, but I think $1 billion asset or management, AUM, I want to say 9, 10, 11. I want to say 12 or 13, somewhere in there. Okay. That was the first billion.
Wow.
Yeah. And that was a big number. I was like,
that's a big.
I remember they told me, listen, let me give your audience a thing. Okay. If I gave Dan $1 a second and I never stopped, I never went to the bathroom, I never took a break, I never went out to eat or something. I just kept 1, 2, 3, 4. It would take me 31.7 years to give Dan $1 billion. Because people use the word billion erroneously all the time. They'll go outside. John, I was just outside. I saw this big flock of birds. There must have been 1 billion birds. I said, no, there wasn't. Because I've done the math. It's 31.7 years of seconds. That's what 1 billion is. So it's a big number. And when I remember, I think I figured that out when we hit $1 billion. I wanted to know how much $1 billion was. And I did the calculator and I go, it's 31.7 years, 1 billion. And so anyway, it's a big number. It's a big number. So
I want to give you the difference between having a great mentor and doing it yourself. This one guy reached out to me and they started a crypto blockchain type of hedge fund, maybe trying to mirror us or something. Right?
Yeah.
And I go, well, how much did you raise? How you doing, dude? And he's like, well, and he gave me some really tiny number. Yeah. Well, how you guys been doing this? He goes, 3 years, actually. And
wow.
I'm like, wow, that's actually longer than us. He goes, yeah. So they didn't have the raising part down.
Capital raising, like you question it. We did it. We did everything. We did any idea that could raise capital. We did it. We did. I mean, it wasn't like we had this one. It was like if there's a potential raising capital, doing parties, sitting on charity boards, going to family offices, going to events. We did it. We did everything that we possibly could to raise money.
Let me give you a testimonial.
Now there we go.
Because I asked you before we launched our fund, what should we do? And you gave me like a handful of tips.
Yeah.
And in that first few months, your son and I, we raised over $10 million.
In just a couple months, yeah.
Yeah. And we were like, wow. Because you said do everything.
Yes.
So we had these networking events. We talked to everybody about it. We would, and a little bit different strategy, maybe it's similar, is we did it by education in that we would teach people how things work. And we're like, well, if you want us to help you, we can. If not, that's cool.
Yeah.
We'll just give you the information.
Yeah.
And then people are like, it's just too time consuming for us to do it ourselves.
Right.
So why don't you help manage this?
So we did something similar back in 2008, 9, 10. It was back in the day when the whole market had crashed and people's confidence of other people handling their money was really low. So we did this for a few years. We didn't have to do it forever, but we did for a few years for credibility. We would invite our investors to come to our investment committee meetings. You'd sign a non-disclosure. You'd sit in the back. It was a real meeting. There's 20 or 30 guys in this meeting, and ladies, and we're arguing over which properties to buy or we're going to buy. We're outlining them on this meeting would go 3 hours. And we're going through the one in Texas, the one in, in Nashville. We're going all these, and the people got to watch us actually scrutinize the properties we're going to try to buy from these banks.
Wow.
And that alone, like education, that alone really gave them the confidence that we knew what we were talking about. And we only did it for 3 years or so until the market started coming back and people weren't so skeptical of people handling their money like they were because of 2008, 2009. Mm-hmm. And that really kind of gave us it gave our investors, our limited partners, a good base. They got to know us in these meetings, and it was a weekly meeting. And you come next week, and people usually
took that out of John's book.
Yeah.
So Bridger and I, we will throw an investor Zoom call. We have Zoom back then, but we invite it to like tons of everybody.
Yeah.
And we invite all our investors, and we update them on what we're doing, where we see the market, how our performance has been, all these things, and all the investors are pretty happy, right?
Yeah.
But everybody else is pretty intrigued that they're getting the same data down.
They're getting to know Dan, right? And they're getting to know how you think. And you're not just doing a pitch book for 15 minutes. Mm-hmm. They're watching you for an hour and they're watching how you solve problems. And that's what a lot of investors really look for. And you have a great concept. You're going to do something with this certain asset class, but they really want to know, how do the people running the show go after and solve problems? And once they find what you do, they're naturally going to invest. They already sold them the asset class, so they wouldn't have showed up to the meeting. Now they're just trying to see, and that hour or whatever, how long ever you guys do that meeting, it's a personable, common, what am I trying to say? Common, a problem-solving event, and they're right there with you, watching you. That's the power in it.
We just implemented this actually from the inception of the fund. And one thing that I do is I say to people, because security has been my specialty for 30 years.
Right.
And I say, hey, man, what's your take on crypto? And some of these guys have millions of dollars of personal crypto.
Yeah.
And I said, have you been hacked before? Probably 50% say yes.
Yeah.
Right? Yeah. And they're like, I don't even know what happened.
Yeah.
And so I usually say, well, if you want, I can help you find out what happened.
Right.
And help you set up your wallets so that it has a less likelihood of happening again with security protocol.
Yeah.
No charge. And so I show them that. And usually what they say is, well, why don't you just protect my money and help it grow?
Mm-hmm.
And it's just not even a sale.
Yeah.
It's just, hey, let me just show you the security problem.
Yeah.
You know,
It's a natural chain of events.
and the growth problem. And a lot of the guys, they simply just didn't pay attention to their holdings.
Mm-hmm.
And then suddenly they lost 90% on something because they didn't look at it for 4 months.
Right.
And it's hard for people to spend time watching. And I think, did that apply to, like, in a way, to real estate too? Like people watching?
Not as much. We used to have a saying, and I didn't do this. One of my partners coined this phrase. He said, we inspect what we expect. So if you buy a property somewhere in another state or wherever you buy the property, you got to go there once a month and inspect what's happening. You just can't.
Well, we inspect what we
inspect what we expect. And you've done this in your business, Dan. I've seen you over the years where you are, my son's told me, and I've watched you, you are a great delegator, but you just don't delegate. You have meetings next week or every 2 weeks, and you go back to the guy or the gal that has this responsibility. You had a list of stuff, and you're inspecting what they were supposed to get done. Did they get 10 out of 10? Did they get 8 out of 10 done? You do this in your business over the years. I watched you for all the years you've done it. And so it's just, we did the same thing. And in fact, that we have assets in other states, we made sure that someone, at least once a month, is there on site and going over, inspecting, not just phone call, but because it's a big property. Some of these properties are 700 units. Some of these properties are 1,000 units. If you have 1,000 unit apartment complex, you can have 3,000 people. That's a small town in Miami,
city,
right? It's a little city. We had one that was a 1,200 unit apartment community, and we didn't have a manager. We had a mayor. I mean, it's a little city.
Mayor?
Yeah, we called him a mayor, right? Because it's a little city. That's a lot of people to take care of. That's 12 swimming pools, 5 clubhouses. It's a major deal to have that many people responsible for.
A lot of guys and gals out there, whether they're buying smaller real estate projects or larger ones, you told me a story many years ago about how you took an apartment complex with many units and you bought it with the fund or something, and you did a change in something with security and making people feel confident.
Value add, yeah. So let me just back up. I didn't do this, okay? My fund did.
Okay.
Right. My partners did. That's what I was telling you about brilliant partners.
So you hired those guys. You
hired them. We merged. When they brought in, they became as equity partners, right? And so we were always saying we have to grab great, incredible partners that understand things we don't understand. And so it's usually you're trying to find a guy or a gal with some gray hair, meaning they have been in some industry for at least 15 years. They've seen it go up and down, and their culture, their work ethic matches yours, and you want them to come in and you want to join. And because I understood the fund world, but I didn't understand. I can underwrite, a 20 unit apartment complex. I can do it, but I don't know how to underwrite a 1,200 unit apartment complex. Don't know how to do it.
Still don't.
But I still don't. But I don't need to. I have partners that are brilliant, right?
How many units were you guys managing in your fund approximately when you were running it? Like 28 billion.
Yeah, so
approximately.
That's a hard question. So there's
how many humans were living in those?
Yeah, I don't know. I don't know.
That crazy?
I don't know because we don't just do at 28 billion. When I retired, we not just did apartments. We did senior assisted living.
Oh yes.
We did industrial space. We did office space. Right. So the 28 billion, but a big portion of it was multifamily, but there was a huge portion of it that was also we were back into lending by that time.
Oh, wow.
We were doing mortgages on large apartment complexes, not to our funds, but to, like if you wanted to go buy a 800 unit apartment complex, we might give you a loan for 3 years, right? The first position, you put some money down. So we had funds that lent on real estate. We had funds that purchased real estate, so those are, and these are my brilliant partners that knew how to do all this stuff, right?
You found specialists.
Yes. Specialists. That's a good word. Specialists in certain areas, and let them just go do what they do best.
How'd you find these guys?
What's
the secret?
It's the hard work. It's whatever. But you got to realize when you're doing a fund, I know how to start businesses. Like I told you, I started 14 in my lifetime. For some reason, I just know how to do it. And I can get them up and running, and they're good. And then, but to take them to a new level, I needed more talent, okay? And I knew, well, I shouldn't say I knew. My assumption was this. There's a guy or a lady, she went to an Ivy League college. She's been working in Wall Street for 15 years. And you know what she thinks about every day she drives to work? One day, she's driving to work. One day, listen to her radio. One day, I'm going to start my own investment fund. But she's still an employee. And there's another dude or lady working for some big bank. They've been underwriting 17-story apartment complexes in New York for loans for the bank for 15 years. And they went to some Ivy League school too. And every day they drive to work. One day I want to start my own real estate fund. Now I know these people are out there. They know how to run they're experts, but they don't know how to start their own. It's a big jump, as you know, is a big jump to going from working for someone for 15, 20 years and then starting your own business. That's a big jump.
Completely different, right?
It's a big difference. There are people out there that have a difficult time and they just can't do it. But if they already have a company that's already started over here, there are 3 or 4 funds already working and they have a salary, right? And if this person jumps from their cushy job to this world of being over here, my offer, or I shouldn't say my offer, our offer was, listen, you're going to come over here. You're not going to make as much the first year at salary, you're seeing, but you're going to be an owner. And what our pitch was this, it's a pretty easy pitch. Listen, you're talking to a lady or a guy that's got gray hair and they've been working at a bank for whatever, how many years, 20 years. Listen, what you don't want to do is you don't want to be the person when you're 65 or 70 retired and said, I worked for 40, 50 years and I always wanted to try to be my own, owner. I wanted to be an equity owner and you never tried. Now listen, you might come over here to our fund and it might not work, but at least when you retire one day, you'll say, I went for it one time in my life, right? You don't want to be the person when you're 65, 70 going, I never went for it. You don't want to be that person. And so that's not the pitch, but that's kind of the pitch that we did. And so we already have a company running. It's already our 4th fund or 5th fund or whatever. And we want you to quit your cushy job and come and become an owner. Listen, if this fund goes, you're going to make way more money here than you would ever make working for the bank. So what do you want to do? You want to come? You want to not come? And we're offering you a position as an owner. This is a vesting schedule, of course, and all that stuff, but you're going to become an owner of the fund. And so that fund would go off, and whatever that fund did, would they do industrial property, they did, office buildings or whatever, that was a specific fund, and they had expertise in that specific area. And that's kind of how we built it. That's why funds can scale.
Yes.
Because my other 13 businesses, I always got them to a good point. They were all, up to a certain point. Everyone has a problem scaling.
Yes.
Scaling is a huge entrepreneurial problem in the United States of America. You're great entrepreneurs. They have a good business. They get it to a certain size and they're making good money. They're buying Porsches. They're doing stuff. They got a little, cabin in the mountains. They're doing great. But they hit a wall where they can't get it much bigger. Mm-hmm. But if you take that same model and you put it into a fund model, it's kind of made to scale. It just scales. Mm-hmm. And that's what, when years ago, when we talked about funds and you were thinking about starting your own fund, and then my son came to me, and you guys had put an idea together. That was, that's one of the big attractions, is that a fund has the ability to just grow exponentially and doesn't absolutely need you every day to be there.
I want to pivot a little. In all this history of building companies and scaling, what's been the biggest challenge, most painful thing, and how do you get through that?
Well, the biggest challenge was scaling. Delegation, which you have done great in your companies that you've run up to this date. I was always a pretty good delegator, but I always knew it, and you do too, that I can do the job in my company better than my employee. The problem is I'm doing, in previous business, let's say it's even in the jeans business, right? I had different jobs and I had 15 hats to wear. I had 15 different responsibilities. And then once I took 2 responsibilities, hired someone and said, these are your 2 responsibilities. And now I only have 13 responsibilities. They have 2. It takes 6 months, 9 months to train that employee. Sometimes they don't work out and you fire them. You go, oh man, I just lost 6 to 9 months of my time. I train them and they quit. They don't work out. They didn't work out. And I got now hire another person, give them those 2 responsibilities. But once you do train those 2 people, that person, take those 2 responsibilities away from you, and they're good at it, takes 9 months or something, they actually will do it better than you because they're only concentrated on 2. Mm-hmm. You're doing 15, right? And so then you hire another person and they take 3 off your plate.
Oh, yeah.
And that was the biggest challenge in the 13 businesses prior to the fund model. Let me give you an example of why in 1999 I said the fund model is for me. One of the reasons was, and this happened over time, but I learned this back in 1999, a general partnership, which you're an owner with my son, and your general partnership, and my general partnerships that I was in, my partners, that general partner is an entity. And that's like the president of the limited partnership. The limited partnership is another entity. That's where all the investors come into. Mm-hmm. Well, so let's take 2 examples. Let's take Steve Schwartzman of BlackRock. I mix those up all the time. Steve Schwartzman of it's either BlackRock or Blackstone. Okay,
one of those things.
One of those 2. I can't remember at the moment. And there's Steve Jobs of Apple. Okay, Steve Jobs of Apple co-founded Apple, and then Apple went public in an Inc., an incorporation. You know what happens every year in an Inc.? Every year in an Inc., these shareholders get together once a year, and they have a vote, and they vote about who's going to run the company the next year. And through I'm not going to go through the details, but through that, that basic thing is Steve Jobs eventually got voted out of his own company.
You fired him.
Yeah. So the board, the shareholders board, the board said, you're gone. Okay. I realized this back when I started my other 13 businesses. I said, I don't want to build a really, 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 really big company and then have one of the big investors say to me, John, we appreciate what you've done for the company, but I want this big investor. I want my kids to run the company now. You're fired. I didn't want that to happen. What I found out about general partnership, limited partnership, when Steve Schwartzman took his company public, he took his company public in the same structure as a general partner, limited partnership agreement. In a general partner, limited partnership agreement, there's never a vote of who's running the company. The general partner runs the company. Unless the general partner commits fraud, which I'm not going to do, I'm never going to be ousted from the general partnership. And this is the structure that I decided, when I heard about it in 1999, I said, that's the structure for me. And it was just lucky that I got in that structure. And it also was a scalable, easy scalable structure. And those are Steve Schwartzman, Steve Jobs. That's the 2 forks in the road, which one, and Steve Schwartzman said, I'm not going to go public as an Inc. until my lawyers and my advisors figure out how I can go public and be a public company and keep that same structure. I'm not going public. And then finally, when they figured out how to do it, then they went public. So he's, the general partner, and he can't get voted out.
That's awesome.
Yeah. And that's, listen, if you're an entrepreneur, now I don't know, I don't know if the United States is the best in math or best, but I do know one thing. The day you were born in the United States of America is your lottery ticket if you're an entrepreneur. And the day you moved here from Thailand or Nigeria, and you don't know the language, and you moved here, that's your lottery winning, the day you moved here.
Oh, yes.
For an entrepreneur, I believe the United States is the most fertile ground on the earth for entrepreneurs. It has the financing, it has the structures, it just has all the things needed for someone to succeed as an entrepreneur. And like I told you, I've lost money on my 3 businesses. But the point is that when I went to bed at night crying on my big pillow sometimes because I couldn't meet payroll next Friday, right? And but if I woke up the next day and I tried again, eventually I knew I would succeed in the United States of America because it's so fertile. Now that business didn't succeed. I had to close some of those businesses because they were losing money. But my goal was to one day be a successful entrepreneur. And I was so lucky to be born in this country. I don't know if you can make money in other countries. I don't know. But I do know if you're an entrepreneur and you just get up every day and try, no matter how many tears you cry on your big pillow at night, if you get the next morning, you get up in the morning and you try, eventually you will succeed in the United States of America because it's so fertile. It's such the structures, limited partnership, Incs, LLCs, you can set them up easy, checking accounts, financing, credit cards. There's just so many ways to make it happen. And it's just a great country for entrepreneurs.
It's amazing. I'm going to pivot again. There's so much wisdom here, guys. So you may need to watch this a couple times. So as far as your crystal ball, because I know you do massive analytics on all things, where is the country going with dollars, Bitcoin, gold?
Yeah. Why is Bitcoin?
What's going to happen? if your crystal ball were connecting correctly.
Gotcha. Well, you all know that Bitcoin just became ETF. There's spot ETFs right now. And 11 of them came out at the same time. And BlackRock was one of them, okay? BlackRock became one of the ETFs for the Bitcoin spot ETF. Now, what you'll see before the day that they said we're going to do ETFs, you watched for a month or two, Bitcoin just go like this, okay? Now, me and you would think, okay, when the Bitcoin ETF comes out, and I go buy, let's say, one Bitcoin from the ETF. I say I'm going to send in however many dollars to this ETF I'm going to buy. You and I would believe then the ETF would have to go out into the market and buy the Bitcoin, so the ETF had the Bitcoin. It's a spot Bitcoin ETF. That makes sense to me. That's not how it works. It's always a game. These guys, BlackRock and the other 10 companies, they knew they were going to be approved. SEC told them, you're going to be approved on this date in the future here, right? So what BlackRock did is they started buying Bitcoins. They buy, and it goes up. 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 And then they have, I don't know how many, all these 11 companies, they have all these Bitcoins because the price went like this crazy. And then the day the Bitcoin ETFs are available to the public, people like me and you, or people start buying ETFs. Who sells them the Bitcoins? The BlackRock has a stash of them and sells them. That's why the price goes down. But if they did the way me and you that, they would have opened and we would have bought and the price would have went up. It's a game. All right. So how do I know it's a game? This is look at my notes here. Sometimes I mess up with my dates. I got to make sure my dates are right here. This is summer of 2020. Okay. Summer 2020. The SEC sued JP Morgan in a lawsuit. And JP Morgan was fined almost $1 billion. Fine. 930 million-ish, they were fined. No one went to jail, but they were sued and they lost. JP Morgan lost. What was JP Morgan doing? They manipulated the precious metals market for 9 years. And they used futures ETFs, spoofing orders. They used a lot of different ways to do it. But what I'm saying is the worldwide price of precious metals, which is 30 times bigger than Bitcoin, was manipulated by a company that has limited financing. They have limited number of US dollars. And they were able to manipulate this for 9 years so bad that the SEC fined them almost $1 billion. Okay. Well, if a company with limited financing can manipulate a market 30 times bigger than Bitcoin, and my thesis in my book is that the number one job of the Federal Reserve, I know they have a job to keep inflation down, and I know they have a job to watch unemployment. I get that. That's some of their jobs. But the underlying job is to protect and promote the US dollar.
Yes.
They've been doing it since 1914, okay? 110 years. And they've done a fantastic job. My US dollars, your US dollars, is accepted almost all over the world. And it's, today it's 58% of the world reserve currency. In the year 2000, it was like 70% of the world, 72% of the world reserve currency. In 1960, it was 45% of the world reserve currency. So it's gone up, it's coming down. And I know there's a BRICS nations out there trying to take it down. But the Federal Reserve, with the U.S. Navy, the U.S. President, the Congress, the IRS, the SEC, they work as a team. Their number one job, keep everyone accepting and protect and promote the U.S. dollar, and that works, okay? So the thesis of this part of this book in a few chapters is if the Federal Reserve ever saw a competitor to their U.S. dollar, their number one product of all time, and by the way, I believe the US dollar is the number one product ever invented by mankind. They make trillions, and we want them. We want them. And some people will lie, cheat, and steal for them. Me and Dan will work 80 hours a week to get them. And then they'll make another trillion of these products will come off the assembly line. And me and you'll work 80 hours a week to get more, and some people will lie, cheat, and steal to get them. They love this product. It sells better than hotcakes, right? It's the best-selling product ever, the US dollar. So anyway, if the Federal Reserve ever decided that there was a competitor to their number one product, they're going to try to take that thing down or try to control it. And I believe they learned how to do it from JP Morgan in the summer 2020. And I believe what happened, the same thing that happened to Bitcoin just a few months ago when the price went like this, that BlackRock, could sell it and make it go down, right, and sell their coins, and all the other 10. I believe in the summer of 2021, 1 year later, the SEC, I believe, my hypothesis says that the Bitcoin was about $30,000, and by November it was $69,000, right? And I believe that the Federal Reserve, with unlimited capital, not limited, unlimited capital, decided they're going to control Bitcoin. And how do you do that? Well, there's a few ways. You have to have a futures market that doesn't have a spot ETF, but just has a futures ETF. Okay. And guess what the SEC did in November 2021? They approved a ETF that could do futures on Bitcoin. Now, a lot of times in history, you find out what people are really doing, what they don't do, what they should do. Now, they had two. They could have approved a spot ETF for Bitcoin, and they could approve an ETF for futures for Bitcoin. They only approved the futures one. They denied the other one, and they didn't correct it until a few months ago. They said, no, we're not going to have a spot ETF right now. It's too much. But we can have futures. Why? Because that's what JP Morgan used to spoof and make the market. So if you can attain 45 days of trading volume of anything, if you have Bitcoin selling 100 coins a day, you would need 4,500 Bitcoins. If 1,000 Bitcoins trade hands a day, you would need 45,000 or anywhere from 45 days to 60 days trading volume. But let's just go with 45. Okay, this is basically what you would do. You would use the futures market to spoof orders all over, scare people with spoofing orders. That's what JP Morgan did. And you would take your 45 days of trading volume and you would put it at $69,000 limit price. There's 45 days of trading volume for sale at $69,000. $69,420. Okay, I think that was the high. And you put it there. And me and you would buy. We're buying into that. We're buying. And it can't go above that. And we keep buying and buying and buying. Can't go above that. And me and you go, wait a minute. There's someone huge selling at $69,420. And then we start selling because there's a huge seller. So we start selling and the public starts selling and it goes down to 68,000. Guess who starts buying at 68,000? The Federal Reserve. They stop selling here and they start buying and they start replenishing their 45 days supply of whatever they're trying to control. And then we go, wait, there's a buyer at 68,000. So we start buying and it goes to 68,800. And then they put their 45 days trading volume right there. You try to get through it. You can't get through it. And then it goes down and they start buying. And the thing is, I believe my theory is the Federal Reserve is not trying to make money on Bitcoin. And that's a hard, difficult opponent to have because we're trying to make money, right? They're not, they're just trying to control. They don't want to kill Bitcoin because if they kill it, then Ethereum will take its spot.
Right.
But if they control it, and I believe that's what happened over that period of time. They're controlling a competitor to their number one product, the US dollar. And that's what they do with the Chinese yuan. They try to control it. That's what they've done with gold. Over the years, they use spoofing orders. Now, so think about this is back to November 2021. These things all happen in 1 month period of time, okay? Bitcoin hits an all-time high. In the same month, the SEC approves a ETF for futures on Bitcoin, but they deny a futures contract, a spot price Bitcoin ETF. They said, no, you can't do it. Okay. They also, SEC extended their lawsuit against XRP Ripple.
Yeah.
And it's still going on today. They've appealed, lost. Why? Ripple, the nanosecond Ripple was invented. Ripple is designed to circumvent the SWIFT wire-to-wire transfer system, bank-to-bank wire transfer system. So if you have a Ripple, you don't need to go to a bank. You could just Ripple it to me, to you, and large amounts of money. That's what Ripple's was designed to do. Speed up the whole bank-to-bank wire transfer. But guess what? The SWIFT system is a dollar-based system.
Yes.
And so you have to get US dollars to use your SWIFT system. That creates insatiable demand for their number one product. Like, let's go back to 1971. President Nixon comes on the TV and he says, listen, we're no longer going to have the US dollar backed by gold anymore. So the next morning that was Sunday night, on the next morning, Monday, the US dollar is a fiat currency. Okay. Let's say in that year you live in Germany and you wanted to buy some oil for Germany. You can't wire your Deutschmarks to Saudi Arabia. No. You have to take your Deutschmarks to the SWIFT system, wire them to the Federal Reserve, New York Federal Reserve. Federal Reserve will change your Deutschmarks into US dollars, then use the SWIFT system to wire the US dollars to Saudi Arabia. Then Saudi Arabia will send you the oil. Most all oil transactions in the world have to be traded in US dollars. And that creates insatiable demand. So back to the November 2021, one other thing happened. So you have the all-time high, a Bitcoin ETF gets approved for futures, one gets denied, and Ripple, the lawsuit against Ripple gets extended. The fourth thing that's crazy is that Hillary Clinton, she got on a microphone, and you love to talk to people, you love to watch people who love to get in the microphone. And she said over a microphone to all of her memes, listen, I'm about to tell you something really important. She said something to the effect of this: Bitcoin has the potential of removing the US dollar as the world reserve currency. That's what she said over a microphone. Now, I run my life not on predictions anymore. I stopped doing that years ago because I don't believe anyone can predict the future. What I run my life on is probabilities. What's the probability if I can buy used Levi's in Utah for $10 and they're selling for $100 in Eastern Germany? What's the probability of making money, right? That's the probability, right? So should I jump into that business or not? So what's the probability of this? Hillary Clinton just grabbed a microphone one day and said, you know what I think? And she just spewed that out. Or what's the probability that she was privy to some meetings prior month or the month before that she knew that the Federal Reserve was going to put the pincers on Bitcoin and try to control it? And then she was hearing something in all her privy meetings. And now she gets the microphone to tell her memes, follow me, always listen to me, I always tell you the truth. What's the probability? And so those four things all happened in November 2021. And so back to the whole control thing, right? So Bitcoin is now entered the ETF world, and it is being tried to I'm saying it wrong. It's entered into a new playing field.
Yes.
Of bigger players that people tell me that no one can control Bitcoin. No country can control it. And I totally agree. This is the problem. Bitcoin doesn't have a navy. And if you're a little country around the world and you're buying and selling your oil in US dollars, guess what the US Navy says? You don't have to have a navy. We'll be your navy.
Yes.
We'll protect your shipping lanes. Saudi Arabia, you don't need a navy. You just sell your oil in US dollars. We'll protect your coasts with our aircraft carriers and our F-35s.
Deal.
As soon as you stop, well, that's a different story, right? It's a bigger game. The US dollar is it's the number one game on the planet. Anyway, I'm rambling. I know you want to pivot, but
well, I'm just wondering.
Yeah, go.
Where do you think Bitcoin, crypto as a whole, will go now that ETFs are approved?
Yeah.
And those 11 companies that have ETFs, they control a majority of the S&P 500 stock, right? So like, this is a big paradigm shift now.
Yeah. So my theory, if you go with my theory, okay, because it competes with the US dollar, these 11 companies are now in cahoots with Federal Reserve. They're in cahoots with the SEC.
Yeah.
Right? They get special deals. Now let me tell you two things about the BlackRock application. The president, the head of the SEC said we're delaying the ETF Bitcoin because we need these companies, especially BlackRock, to change their application. What do you mean change their application? And then when the application came out, there's two crazy parts. All right, one part of the BlackRock's application, I'm paraphrasing, says this: that BlackRock, if needed to be in their ETF, could sell more paper or hypothecate their ETF to control the price ups and downs of the market for the Bitcoin. What does that mean? That means, like in gold, you know right now that there's this much gold on the planet, but there's this much paper written on it. Mm-hmm. Options, right? Mm-hmm. There's like 30 times of options written on there's one coin of gold, but there's 30 puts and sells and options, right? There's more, right? What that sentence means is BlackRock and all these, I believe the other applications can sell paper on their Bitcoin spot price to keep it. They can, they can hypothecate it just like they're doing gold. That's one part of the BlackRock application. The other part that was strange to me when I read it was that it said something to the effect of this. If BlackRock, it says the sponsor being BlackRock, if the sponsor at some point in time sees that the product is going to fork, but they mean the Bitcoin is going to fork, the sponsor cannot guarantee which fork they would choose, even if the choice is detrimental to the client. Why would you write that into your... Why is that even in an application for an ETF for Bitcoin? What are they proposing? What are they trying to do? So it's a long answer to your question. I'm saying Bitcoin has arrived to a bigger ball field. It's got bigger things. It's not just an honest game anymore. This is a game up here of being manipulation with a company, Federal Reserve, that has unlimited finances. And so I believe that Bitcoin is the greatest idea under the planet. I believe in the future, I don't know how long, 100 years, I don't know how long, it will probably eventually win. But in the short term, 10 years, 3 years, 30 years, I believe it's got a big, huge Goliath to take down. And that's called the Federal Reserve, the U.S.
So do you think it's going to go up or down or sideways?
Well, I think you have to get on the side of the manipulators.
Yeah.
Like if you're on the side of the manipulators and you go, 11 companies are going to be approved here pretty soon. Bitcoin's going up. They're buying. They're buying to manipulate it. So I should buy too. And I remember the day that it went, the day that it became an ETF, all the ETFs are approved. I had one of my relatives text me, John, should I buy Bitcoin now? And I said to him, no, I'm thinking about selling my Bitcoin. And it blew his mind that it's now an ETF. And sure enough, it hit 48,000 and then just started tank, right? Because it's being manipulated. The same as gold and silver.
And up and down.
So you have to stop thinking about it's a free market where a willing buyer and a willing seller can come together and determine the price. Okay? Start thinking about it. There's a game.
Oh, yes.
And once you figure out it's a game, I think you will increase your profitability as you buy and sell Bitcoin back and forth as you think about it as a game.
I wanted to share with you my newest theory. I don't think I've told you. From my analytics, and I don't like to go off gut feelings about math and logic and those things. But we're a little bit older. We started our companies in the early 90s. And I remember at the time buying Apple stock, right, in the early days, Microsoft.
Yeah.
I remember in 2001, September of 2001, my Apple stock dropped 51% in one day.
Yep.
And everyone's like, that
can't happen.
No, this is a scam. What's going on?
Yeah.
And so when people talk about scary volatility in emerging technologies, Apple, that same year, Amazon dropped 80%.
80%. Yeah.
So
80%, yeah.
Right now, I don't look at crypto as gold. I don't, as a digital gold. I don't look at it as like a dog on a coin or like that. I look at crypto as software.
Okay.
And you have different ecosystems of software, just like you have Windows platform, iOS platforms, right? And it's a war of platforms that are out there. Now, more importantly, this is kind of our investment. This is our investment fund thesis. Within those software ecosystems, you have different things programmed under that. So, for example, Ethereum, let's just take for example, may have thousands of projects being developed using Ethereum or Ripple or whatever it may be.
Yes.
And I look at those individual software projects as almost like privately held companies in a way.
Yeah.
And if you look at the NASDAQ, right, and you look at all the stocks comprising all these different tech stocks, they can be manipulated.
Yes, they can.
Easily manipulated by the buying this, futures, this, the puts,
right,
options.
Correct.
And so now, basically every ecosystem is a software, but also it's almost like a privately held stock that can be manipulated.
If someone focuses on it.
Yeah.
Yeah. You need big opponents to focus on you, and then you can be manipulated. When they're not focused on you, when Morgan Stanley's not focused on gold and silver market, it kind of free float. With the Federal Reserve's not focused on Bitcoin, it free floats. It's just when they get, it's like, Well, anyway, it's just like anything in life. There's thousands of laws. I probably broke 3 laws driving to work here, right? If someone would have followed me and focused on me, they could have pulled me over 10 items, right? Because there's so many laws. And it's kind of the same thing.
Now that it's controlled by the government, essentially, almost all crypto ecosystems, in a sense, it's kind of like the NASDAQ. And so people ask my prediction. Well, do you think the NASDAQ is going to go up through time? Yes. Is crypto going to be up? Yes. With project development and innovation, it's just the next software platform.
Yeah.
And our job as hedge fund managers in crypto, my job and Bridger's job, is to be able to see which software has the most compelling functional utility and value.
Most enterprise, yeah.
That's our job.
You're right.
So a lot of people go, hey, your fund, are you guys buying primarily Bitcoin? No, small percentage of it. Because if you look at, let's say, Apple Computer, if you watch Apple Computer rise, right? Or if, let's say, you watch Amazon rise, what ends up happening, though, is those majorly large assets, the smaller ingredients of the cake, the components, take an exponential rise and drop through market volatility. So the idea is to catch those mid-size pieces of software and smaller components of that software that are necessary for it to function to catch really the big ups. And I found this with tech stocks and things like that. So whether the government's controlling it or not, I've always been, and Bridger too, we've been very pro-regulation because it builds validity in the markets.
Right.
And so now we've basically just created a new equities market. That's all we have.
All these enterprise values in these different coins.
Exactly. So I think a great, compelling future.
I like it.
But I think if people want the super detail, because you've given them a drop of what is in here.
Amazon.com and audible.com.
That's the place to get it, right?
In fact, I went in, it's my voice for over 6 hours. If you want to listen to audible.com.
I love it.
You love my voice? So I record the whole thing.
He's the modern day Captain Kirk.
There you go.
I always say he looks, and if you've seen Bridger, he looks like younger Captain Kirk.
There you go.
Crazy.
Here you go.
So can people so I know you're a private guy a lot. You're enjoying your life now. Can people reach you to learn from you, or is that completely all through the book?
Yeah, it's pretty much through the book. I go to events, I speak at events, and I always stay late, and I always do questions and answers for sometimes hours. But yeah, I'm pretty much 100% retired.
You're not a big social media guy.
Yeah, I'm not a social media guy either. But when Dan calls me for lunch, I always go to lunch.
Guess what, guys? You probably think, Dan, where are you getting all this information to put on your social media? Well, I learned from guys like John and Jeff and other guys like that are very privately willing to share me stuff that can help me. And I love to share with you. So watch that at Dan's Millionaire Code. If you do have a question for John, feel free to ask me. And if it's a compelling question, for sure, I will ask John and probably
that works.
relay that out to you. So you can tap into the Grand Master Jedi through proxy. That way, right?
Yeah, sure. Yeah.
All right, man. Is there any last lessons or things or message you want to get out to everybody out there that's watching this right now?
Yeah, I would just say that again, have some motto. Like I had the mantra, I don't want to be old, but old and poor at the same time. Have something that gets you that you can repeat over and over to yourself like that. And just remember that it is, I believe, your lottery ticket the day you were born here or moved here, if you're an entrepreneur. Just don't waste your lottery ticket, because you're going to have losses, you're going to have gains, but it's such a great fertile field for someone to just plant a business idea and let it grow. So that's what I would say.
Excellent. Guys, if you found this education helpful, and if you have questions or anything like that, share this with your friends. Follow me at Dansmillionairecode. Share it with your friends. I will, in proxy, relay wisdom from John that's passed to me to you and other masters. That's how you can help yourself and help the world. And most importantly, when you take this knowledge, please execute on this knowledge. Don't just let it sit there and just hibernate. And make sure to go buy this Dollars, Gold, and Bitcoin book on Amazon, Audible as well.
Audible.com.
Or Amazon. Right now, it'll be one of the best reads or listens. And again, take everything out of here and execute that.
Thank you, Dan. Appreciate you.
All right, man. Thanks. I appreciate you, John.
Thanks.
You've been watching Dan's Millionaire Code. We'll see you in just a little bit.